joined by Mr. Ved Goel, who's a Group CFO and CEO International Business, as Dr. Lal Pathlabs joining us on the show to talk about the quarter gone by and the way forward for the company. A very good morning to you, sir. Thank you so much for joining us on ET Now, and talk about your overall volumes, because your volumes growth has only been about 3.9% in a rather seasonally strong quarter. If you could tell us what is the reason for the tepid volume growth, and also are you planning to increase the coverage in tier 3 and 4 cities as well?
Sorry. Good morning. On volume terms, our first half volume growth is about 5%, 4.8% precisely. And in this quarter, it's about 4%, slightly lower. But if we see from the last year, we have increased substantial volume growth. And the reason of lower volume in this quarter is some seasonal impact. We are carrying very high base of last year because we had some impact of fever last year. So that is where volume is slightly lower this time. But we are confident that going forward, second half, the volume will be better than first half.
I think second half will be better than first half because it is normally believed that large part of the diagnostic, at least, the testing happens in and around monsoon when the vector diseases are high, which tends to give you a bump up.
Yeah, Nikunj, that's right. I think this time we haven't seen any, surge in these infectious diseases, especially in our geography, which is north. I believe there are other areas where we have seen like west side, there is a surge, but in north where we are substantially based in north and east, there is we have not seen that kind of infectious or fever kind of surge in this quarter.
Current business is coming from what could be called as preventive business, because that's where I guess high growth and higher margins are there. There was a time when you were going to a diagnostic company, or you would call a blood drawer only when it was necessary. That was to find the disease. Now it's preemptive care, which in a sense is also growing. How big is that for you?
So our Swasthfit is doing well, and growth is in fact more than double the growth of the company, and this contributes 24% in this quarter. This revenue from Swasthfit is 24% of our total revenue. In my view, I think going ahead also this story will continue. The reason because it's not only preventive, but people who are coming for individual test, now they are opting for a package, and we are also it's a value for money for them as well as for us. It makes sense because servicing cost is low, realization is high, and for the patient is also reducing the visit, where in one visit he is getting more tests at a discounting rate. And these are we have seen this is a habit which is forming. Instead of let's suppose I'm a diabetic, instead of doing individual test of sugar, fasting, PP, and then sometime HB1AC, if I can get a package and do all these 3 tests in one go, it makes sense for me, because ultimately I know I have to do a test later. So this, I think this is one where the practices or the habit is forming, where instead of individual test, somebody is opting for package. Second, this package we are now offering to our other areas, including our franchisee, and especially below tier 2. In tier 3, tier 4 towns also, we are offering these kind of bundling packages to the patient. So in my view, this contribution from this segment will continue to be there, around 24-25% of our business.
Right. Mr. Goel, let's talk about the online competition that the entire diagnostic space actually saw creeping up, and actually there was a strong online presence as well for the other players as well. Has the competition now eased a bit? What was the pricing war that was underway there?
I think competition is always there, and it was there, but the irrational competition, I would say, that where we have seen deep discounting, irrational spend on A&P, advertisement, and so on. So that has stable, and I think for last couple of quarters we have seen it is not as irrational as earlier. So in that sense, I think that kind of competition which we all talked about, online e-commerce kind of, that is bit stable now. But players who have entered in this industry are still there. I'm not saying competition has gone away, but irrational competition is there. And the pricing, if you see the surrogate measure where one can say this is not, because everybody has taken a price increase. We have not taken any price increase in this year, and let me tell you, this growth is in spite of not taking any price increase. If you remember, last year we had taken a price increase which had impact of 3.5% in the top line. But this year we are growing without price increase, and we don't intend to take any price increase in future, at least in this financial year. So competition is, in my view, irrational competition is stable, but yeah, competition is always here.
Reason competition that you're not planning to take price hikes this year? Would you attribute it to that, or the cost hasn't gone up and you're comfortable with the margins?
No, we are comfortable as far as I am able to, maintain my margins. I don't want to take any price increase, and especially we are, keen to increase our revenue by volume, whether it is patient volume plus sample volume or mix, which is like the portfolio, which is strategically and balanced. We are doing between the Swasthfit and the high-end test. So I don't think we are, unless until, push come to shove that we need to take price increase. Having said that, competition has taken a price increase in this year, while we are not looking any price increase.
Point taken on the price increase bit, but your FY25 margin target was 27%. First half of the year, you've delivered close to 30%. Most likely that you'll be hitting the, you'll be able to surpass the guidance on margins, or you're expecting it to be slower in second half of the year, let's say 24.5%.
No, I think we did 27.4% EBITDA margin last year. We may slightly better in this year. This first half margin is 29.5% in this year. But second half, normally our margins are lower than first half because there are some investment, there are some expansion in terms of infra, and we are also investing newer geography, spending more on A&P. So I think second half margin normally we have lower than first half. So on yearly basis, I would say we can still do better than last year. But it will not be, like in this quarter we had 30.7%. This is not the representation of the full year.
So what happens to your cash flows? Would you be looking at expanding more, because you're sounding confident to me? You've acquired an asset in western part of India, which is Mumbai suburban. Are you happy with two geographical concentration, which is north and west, or you would be looking at other geographies? How would you be mapping your growth now?
So I think we are well spread. I think north, east, and west. In fact, east and west is contributing about 15% each from each geography. And happy to share that suburban, which we acquired roughly 3 years back. This time, suburban growth is better than the company average. Suburban growth this time is 11.6%, and margins also have improved for suburban. So happy that we have seen after a long time double-digit growth for suburban, and I am very confident that going forward also we are able to sustain this kind of growth for suburban. Having said that, on cash, we know that we are carrying 1,000 plus cash in our books, and we are keeping balance where we are paying every quarter some dividend. But large part of this cash is remain because of our strategy, where we are looking something in south, where south is only 5-6% of our business. So obviously, in addition to organic, we also looking inorganic opportunity there.
Okay.
And obviously that is one area where, or geography where probably we will find some good asset, and we'll do something there in south.
Okay, hoping for some inorganic expansion in South. We'll talk to you when you're able to do that as well, sir. Thanks so much for making time and speaking with us today. So,
there comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.